Hello everyone and welcome to FOREX. On our last video we talked about candlesticks pattern, and today we'll be talking about one more candlestick pattern, which is the engulfing candles, and we'll dive right straight into chart patterns. Okay, stay back. If you have not subscribed to the channel, please do subscribe and click the notification button. Okay, meanwhile for today we'll be talking on the engulfing candles. Like I told us last time, every candle tells a story. Okay, so in a scenario when a trend is making lower lows, printing candles lower in this form, okay, in this form, suddenly print a smaller candle, okay. From what we can see, this is a downtrend, okay, and suddenly we get a candle like this, a green candle. What does this tell you? What story this candle telling? This candle is telling that there are an influx of buying orders by the buyers came in at this point, okay. So this is suggesting that there is likely a reversal. The reversal is imminent at this point, okay. So this is a bullish reversal candle, bullish reversal engulfing candle. Consequently, we can have an uptrend going on in this way, making higher highs, print a candle, then suddenly we'll get a bearish candle here in this form, okay. So what is this suggesting to us? That there is a high volume of sell orders that came in here, okay, suggesting that reversal is imminent, okay. So then meanwhile, notwithstanding, we don't trade these patterns in isolation, okay, and stay glued to the channel. We'll still buttress more on the application of candlesticks pattern, okay. So right now we'll be going straight into the chart patterns. Okay. So and then we'll go straight into the chart patterns, and the chart patterns we'll be talking about today. I'll be talking about four major chart patterns. And those four major chart patterns: one, we'll talk about the head and shoulders pattern. Shoulder. Two, the inverse head and shoulders pattern. Then we'll talk about the wedge patterns. The wedge patterns, okay. Under the wedge patterns, we'll have the falling, the rising, and the falling wedge. So these are the four major patterns I look out for, okay, because these four patterns can denote bearish reversal, bearish reversal, or bullish reversal. So I look out for them on the chart. There are other patterns here at the bearish flag, bullish flag, but I don't pay attention to those ones. These are the four major patterns. Stay with us on this channel. As we progress, we'll move further to SMC patterns and how to apply the head and shoulders pattern, the wedge patterns, while trading the SMC pattern, okay. So at this point, we'll take one, the head and shoulder. Okay, we'll take the head and shoulder. Now, when a market is moving in this way, okay, market is moving in this way, okay, making higher highs, you can see this is showing that this is an uptrend. This is an uptrend, making higher highs, okay, does this, make another high, okay, comes down. It is expected that we should get another high here, but we'll get instead a higher low. What does it tell you? It tells you that the buying momentum is dropping. The buying momentum is diminishing at this point. So suddenly you get something like this. So at this point, this is the head, the left shoulder, right shoulder. Okay. Now, how do you trade this pattern? You don't just see this pattern form and you take a trade. No, that's not how to trade it. Now, this is the neckline. This point is the neckline. We'll call this the neckline. Neckline. Okay. So how do you trade this pattern? When you identify this on a trend, depending on the time frame you are using, we'll still have to talk more on this. That's why I say that's why you must have to subscribe to this channel. Okay, depending on the time frame. Now you spot this on maybe 4 hours, 15 minutes, or 1 hour time frame. Now this can be a base. This is a base. This can be the base that push this trend, or this is another base here. Okay. Now it is expected that when this breaks out, there must be a valid breakout. And this breakout must be a fully formed candle, not a wick, because a wick can be a liquidity grab to continue the buying up. Okay, so once it breaks out to this point, on the retesting this neckline, retesting the neckline, remember I told you this is the neckline. On retesting the neckline, you take a sell at this point, the stop loss above the shoulder, you take your first profit. And the next base, because this is the opposing liquidity, you take the first profit here, then second profit here. I hope this was clear. So this is how you use the head and shoulders pattern. This is what it is all about. The head and shoulders pattern is a bearish reversal pattern. Okay. Then we also have the inverse head and shoulders pattern. Okay. If there is any question regarding to this, you can chat us on the comment section. We are ready to attend to the questions. Okay. Then we'll have the inverse head and shoulder. Have the inverse head and shoulders pattern. Inverse head and shoulder. So this is just an opposite of the head and shoulders pattern. Remember, I told us earlier, the head and shoulders pattern is a bearish reversal pattern, while the inverse head and shoulder is a bullish reversal pattern. So when a trend is making lower lows, suddenly we get this. We're expected to get another low at this point. We're supposed to get another low here. But instead, we got this. Okay? We got this here. We got this. Like I told us, this is the neckline. The neckline. Is the neckline. This is the left shoulder. This is the right shoulder. Okay. Now, what do you expect? The same application. The way we apply the head and shoulder, just it is an inverse. Okay. You wait for a break. On retest here, you take your entry, buy, stop loss below this shoulder here, below the shoulder. Then you take your first profit at the first base. This is the first base here. Then the second base here, the second profit target. Okay. I hope this was helpful. And then in our next video, we'll be talking on the rising and the falling wedge. Okay. Meanwhile, I will show us a live chart of the head and shoulders pattern to see how it played out. Okay, so thank you. Stay glued to the channel, subscribe, click the notification button as we look forward to bringing insightful content to make you a better trader. So meanwhile, we're going to be taking you now to the chart to show you how the head and shoulders pattern played out perfectly on Bitcoin. Right now we are on the chart, on a Bitcoin chart, and this is the 15 minutes time frame where we're trying to spot the spots where head and shoulders pattern played out. Okay, and let's look at this point. From this point, you can see Bitcoin was making higher highs. That is to say it was in an uptrend at this point, and it got to this place, made a higher high here, made another higher high, came down here, failed to make a higher high and broke out. Now, what happened here? You can see this is the left shoulder, this is the head, this is the right shoulder. It broke out here with a fully formed candle, retested at this point, okay, and sold all the way down. So guys, you can see this is the implication and application of a head and shoulders pattern in an uptrend. So guys, I implore you guys, please subscribe to the channel as a way to support what we are doing. Subscribe and click notification button as we look forward to bringing more insightful content to make you a better forex trader. Okay, thank you guys. See you in the next video.